gold. Is it setting the foundation for another big bull run to the upside? So guys, last Friday, gold got slammed. Why did gold get slammed? Well, we had that very, very strong US jobs data. Remember, NFP plus 2.5 million, expectations were for minus 8 million jobs in May. So it's a 10.5 million beat on expectations. Ridiculous, unbelievable. Gold got slammed because it's a safe haven, because we saw that risk on. Gold fell from above 1700 to, well, below 1680. But today, gold has recovered quite strongly, now trading above 1690. So that's a fairly decent $10 gain on the day. Why is gold gaining? Well, guys, you have to remember one key thing. Let's look back at that data. Yes, 2.5 million jobs were created in May against the expectations for 8 million to be lost. And that's great, that is great. The economy and the jobs market in the US is moving in the right direction, but the unemployment rate was still above 13%, meaning that, 19 or 20 million Americans are still out of work. So yes, we're heading in the right direction now in the US economy, earlier than expected, but there's still a long, long way to go on this recovery. And the key thing here is the Fed, the US Federal Reserve, knows that, okay? They're not going to be getting too ahead of themselves because of one very, very good US jobs print. They're pretty much, everybody expects over the next couple of months, even years, the Fed is going to continue pumping the market with stimulus. Seeing research from loads of central banks, I saw a note from Goldman Sachs today. They expect the Fed, despite these gradually improving economic conditions, they expect the Fed to do a new QE program, more of a traditional QE program, rather than to do with like solving liquidity issues in markets. And they expect yield curve control, and they expect more explicit forward guidance, basically to provide the economy and financial markets with the stimulus that it needs. So pretty much, guys, this stimulus, yes, things are starting to get better, but things are still bad. So this stimulus is not going anywhere. And what do we always say about gold? Gold loves central bank stimulus, and nobody has been more, pumping more stimulus into the market than the Fed. So as long as the Fed is being dovish, pumping the markets full of QE, low rates, even yield curve control, gold should remain supported. That is pretty much it from me for now, and I'll see you in the next one.